Hey everyone, welcome back to Corporate Decoder, the place where we unravel the secrets of corporate filings and then use them to predict stock movements with a little bit of sass. Today we are diving deep into the Bitwise Crypto Industry Innovators ETF, its SEMI, annual shareholder report for the 30th of September 2025, and let me tell you there are some juicy details in here about crypto exposure and market performance. Before we dive in, if you appreciate getting straight digestible insights from these dense financial reports, make sure you are subscribed. Also, we have a community Discord server linked in the description below where we break down these filings even further and discuss investment strategies, so definitely check that out. Alright, let's get straight to it. This report for the Bitwise Crypto Industry Innovators ETF, known by its ticker BITQ, is for the period ending the 30th of September 25. The big story here is how this ETF is positioned within the crypto space and what that means for investors. First, let us look at the fund's key stats. As of the 30th of September 2025, the total net assets of the fund were a whopping $415.7 million. That is a substantial amount of money invested in crypto-related companies. They held 31 individual investments, and the total advisory fees paid during this period came in at just over $1 million. That is a significant chunk for managing the fund, and we will get into the advisory fee later. The portfolio turnover rate was 36%, which tells us about how actively or passively the fund is managed in terms of buying and selling its holdings. Now let us talk about where the money is actually going. The sector weightings give us a clear picture of the fund's strategy. A massive 67.1% of the fund is invested in information technology companies. This is likely where most of the direct crypto-related plays are happening. Think companies involved in blockchain technology, cryptocurrency exchanges, and related infrastructure. We see a significant 28.1% in financials. This could include traditional financial institutions dabbling in digital assets or crypto-friendly banks. Then we have 13.8% in short-term investments, which can be seen as a bit of a safe haven within the portfolio, and a smaller 4.2% in consumer discretionary. This breakdown shows a heavy concentration in tech with a solid financial backing, a strategy common for navigating the volatile crypto market. Let us dive into the specific companies that make up a good chunk of this ETF. The top 10 holdings are crucial because they often dictate the fund's overall performance. At the very top, we have Iris Energy making up 12.5% of the total net assets. Iris Energy is a major player in Bitcoin mining, so this is a direct play on the cryptocurrency's price movements and mining profitability. Next up is Coinbase Global CLA, holding a solid 9.1%. As one of the largest cryptocurrency exchanges, Coinbase's performance is deeply tied to trading volumes and regulatory developments in the crypto world. Then we have MicroStrategy CLA at 8.7%. MicroStrategy has become a prominent corporate holder of Bitcoin, making its stock performance heavily influenced by the price of Bitcoin. Applied Digital, at 5.3%, is involved in digital infrastructure services, often including data centers that support cryptocurrency mining and other blockchain operations. CleanSpark, another name in Bitcoin mining, accounts for 4.9%. Riot Platforms, also a significant Bitcoin miner, holds 4.8%. Mara Holdings, another mining company, is at 4.6%. Core Scientific, also in Bitcoin mining, makes up another 4.6%. Cypher Mining, a Bitcoin miner, is at 4.1%. And finally, TeraWolf rounding out the top 10 with 4.1%, also a Bitcoin miner. Notice a pattern here. A significant portion of the top holdings are Bitcoin mining companies. This means that BITQ's performance will be heavily correlated with Bitcoin's price action. The footnote notes that some of these securities are on loan, which is a common practice for ETFs to generate additional income. The total value of securities on loan was a massive $56 million. That is interesting income generation aside from pure investment gains. Now, for a really significant event that happened during this reporting period, on the 5th of September 2025, shareholders approved the proposed reorganization of the fund into the Bitwise Crypto Industry Innovators ETF, a newly created series of the Bitwise Funds Trust. This reorganization was completed on the 24th of October 2025. What this means is that the fund is essentially migrating to a different trust structure, but maintaining its investment objective and strategies. This is a common move for ETFs to leverage different trust structures that might offer operational or cost benefits. Let us move into the heart of the financial statements and see what the numbers are telling us since the last report. Here we have the schedule of investments as of the 30th of September 2025. It details all the holdings. Under common stock, we see the breakdown by industry. Consumer discretionary has investments like Mercadolabra and Metaplanet. In financials, we see big names like Bank of New York Mellon, BlackRock Funding, CME Group, and of course Coinbase Global. PayPal holdings and Visa are also listed here. The information technology sector is where the crypto action is, with Applied Digital, CleanSpark, Core Scientific, Hut 8, Iris Energy, Massachusetts, Ra Holdings, MicroStrategy, and Riot Platforms all featuring prominently. What is interesting is the total fair value of common stock held is showing $413.3 million. This is slightly less than the total net assets of the fund, which makes sense as we will see other assets and liabilities. The fund also holds $57.3 million in a short-term investment labeled as Invesco Government 20 Amp Agency Portfolio. This is essentially a money market fund, providing a stable, liquid asset to complement the volatile crypto-related stocks. The footnote C mentions that this was purchased with cash collateral from securities on loan. This is a smart way to generate yield on assets that are otherwise sitting idle. This statement is like a snapshot of the fund's financial health at a specific point in time. As of the 30th of September 2025, the investments at cost were $318.1 million, but their fair value was $470.6 million. This difference of over $150 million represents unrealized gains on the investments. That is a substantial paper profit. Cash and cash equivalents were around $2.5 million, and receivables added a small amount. On the liabilities side, we see payable upon return on securities loaned at $57.3 million, which is tied to the securities lending we discussed. Total liabilities were about $58.8 million, leading to net assets of $415.7 million. This statement shows the fund's income and expenses over a period. For the 6 months ended the 30th of September 2025, total investment income was about $664,000. Not a huge amount compared to the fund's size, but remember this isn't the primary driver for a growth-oriented ETF like this. The big numbers come from investment gains. Net realized gain was over $28 million, and the net change in unrealized appreciation was a staggering $144.8 million. Combined, this resulted in a massive net gain of over $173 million from operations. This dwarfs the advisory fees paid. This table shows how the fund's net assets have changed over time. For the 6 months ended the 30th of September 2025, the net increase in assets from operations was over $173 million, and the increase from capital share transactions, meaning new money coming in through share purchases, was nearly $95 million. This shows strong investor demand during this period. Now let us look at the financial highlights which give us a per share perspective. For the 6 months ended the 30th of September 2025, the net asset value per share started at $12.15 and ended at $25.08. That is a massive increase, over 100% return for this period. The net asset value total return percentage for this 6-month period was 106.42%. This is an incredible performance, driven by the unrealized gains we saw earlier. The expenses as a percentage of average net assets was 0.85%. This is the expense ratio you are paying as an investor. For a crypto-focused ETF, that is on the higher side. But given the performance, it might be justifiable for some investors. The notes to the financial statements are where we get more context on the numbers. Under significant accounting policies, they talk about how they value their investments. For securities traded on exchanges, they use quoted prices. For less liquid assets, they have a fair value procedure. The report states that as of the 30th of September 2025, all of the fund's investments were considered level 1 of the fair value hierarchy. This means they are valued using unadjusted quoted prices in active markets. This is great because it signifies high liquidity and reliable valuations for the fund's holdings. There is a detailed section on securities lending. The fund has agreements to lend out its portfolio securities to generate income. As of the 30th of September 2025, the gross amount of recognized assets, which is the value of securities on loan, was over $56 million. The value of cash collateral received was also over $56 million. This collateral is invested in short-term investments, adding another layer of income generation for the fund. This is a common practice for ETFs to boost returns, but it does come with some risks. The principal risk section is crucial for any investor. They highlight crypto asset risk, which is pretty self-explanatory. They also talk about crypto innovators risk, noting that this technology is new and many users are untested. There is currency exchange rate risk if they hold foreign assets, and crucially, limited authorized participants, market makers, and liquidity providers concentration risk. This is important for ETFs because it highlights the potential for shares to trade at a discount to their net asset value if key market participants exit or reduce their activities. The fund is also non-diversified, meaning it can invest a larger percentage of its assets in fewer companies. This can lead to higher volatility as the performance of a few key holdings can significantly impact the fund's overall results. They also call out sector focus risks, with specific mentions of financial sector risk and information technology sector risk. Finally, item 11 delves into the basis for approval of the investment advisory contract. Here, the Board of Trustees reviewed the services provided by the investment advisor Exchange Traded Concepts LLC, or etc. They looked at the fund's performance, the advisor's costs and profits, and comparative fee data. They noted that the advisory fee was the highest in its peer group, but justified it by the specialized nature of the index and the unitary fee structure, where the advisor pays other expenses out of their fee. They also considered the risks borne by the advisor. The board concluded that the agreement was fair and reasonable. Now, let's cut through the jargon and see what this all means. The Bitwise Crypto Industry Innovators ETF, BITQ, has shown incredibly strong performance over this 6-month period, with its net asset value soaring by over 100%. This massive gain is primarily driven by the unrealized appreciation in its holdings, which are heavily concentrated in technology and financial companies heavily involved in the crypto space, particularly Bitcoin mining. The fact that their investments are classified as level 1 fair value assets signifies good liquidity and reliable market pricing, which is a positive sign in the often opaque crypto markets. The fund's strategy of investing in companies that mine Bitcoin and facilitate crypto transactions has clearly paid off during this period. However, this concentration also means BITQ is highly susceptible to the price swings of Bitcoin and broader crypto market sentiment. The report highlights a significant portfolio turnover rate, suggesting active management, and the securities lending program is generating a notable amount of income, which helped boost overall returns. A key takeaway is the fund's exposure to limited authorized participants and market makers. This is an inherent risk of any ETF, and if these entities face difficulties, the ETF shares could trade at a discount to their true value. The high advisory fee, while justified by the fund's unique strategy and the advisor taking on other expenses, is still something for investors to consider, especially when comparing it to other ETFs. In conclusion, BITQ has delivered exceptional returns for its shareholders in this reporting period, riding a strong wave in the crypto-related equities market. The fund's heavy weighting towards Bitcoin miners and tech companies directly tied to crypto innovation has been a winning formula lately. However, investors must remain aware of the concentrated risks, the impact of Bitcoin's price volatility, and the potential for trading discounts due to a limited number of key market participants. This is not a fund for the faint of heart, but for those seeking aggressive growth exposure to the crypto ecosystem through equities, it has certainly demonstrated its potential. Alright, that is our breakdown of the Bitwise Crypto Industry Innovators ETF's latest filing. What is your take on these numbers and what they signal for the company's future in the crypto space? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives into the corporate world. Don't forget to check out the Discord in the description for more exclusive content and discussions. Thanks for watching. See you next time.